What's up, YouTube? Welcome back to another episode. In our last episode, we talked about the broken wing butterfly option trading strategy, and we promised you in that episode that we would have a demo transaction that we would be tracking going forward. If you haven't seen that last episode, I'll leave a link in the description below. You can click that link to find out what the details of the broken wing butterfly strategy is. Before we proceed, though, we will do a bit of a summary. So, for those of you who know, please be patient. We will get there and we will execute the demo transaction, and we will have subsequent episodes where we track the success and hopefully not failure of such transactions. All right, let's get it. So, in our last video, we talked about options, and we said option contracts allow you the right but not the obligation to buy or sell multiples of 100 units of a stock at a set price on a predetermined date in the future. And we also mentioned that there is a premium that is paid to the seller of the option contract. We also talked about the broken wing butterfly options trading strategy, and we said that there are three trades that combine into one. So what you want to do is to look for the expiry date that is between 5 to 10 days from the date you are entering the trade. You want to look for the price point on the SPY index option chain that is at the 10 delta mark, and you want to sell two put contracts at that price point. Then you want to buy a put contract that is 1 unit or 5 units, so between 1 and 5 units above the 10 delta price point. Then with the profit you make, you want to go and look for a put contract to buy at a price point such that you're able to get a net credit of about 10 cents per ETF, which will translate to about $10 in net credits paid to you. However, the most important thing is you should be looking for a probability of profit of 92% and above. Right, so let's look at the trade and how to execute this. It's important to emphasize that your probability of profit should be your most critical index in the consideration for this trade, because what you want is you want to mitigate risk. And in as many of your trading transactions, it's more important for you to mitigate risk than for you to increase your profit making potential. You're better off making a small amount but with a higher chance that your trade will result in profit than trying to aim for a higher amount and then putting your capital at risk. This is one of the biggest challenges that faces a lot of people that go into options trading. They get carried away by the potential to make huge profits and they don't cover their tracks properly to mitigate risk. So, that having said, we will now look at the SPY options chain. We maximize this. We've said we're going 5 to 10 days. So August 19 is 4 days away. The next one is August 22, which is 7 days away. So we'll start here and we will look at all strikes. Right now, the SPY. So we want to start by looking at the 10 delta. So you see the delta column here. The 10 delta will be there about 0.1. So we don't have the 10 delta, we have the 9 delta. And so let's pick the 9 delta, which is strike price 412. And so we select the bid we want to execute the trade at market. And then what we said was we want to go a step higher. So the next strike is 413. So we select that. And we see here the 412 will give us a return or premium of 0.5. So if we multiply 0.5 by 2, that will give us 1, and we subtract 0.58, we'll be left with 0.42, and we said we want a net credit of about 10 cents. So if we subtract 0.1 from 0.42, we're looking for a price point that is going to give us a premium of about 32 cents. So we go further down and we've got something here that is 30 cents. And so that's 408. So now we want to increase our sell to open to 2 contracts. So we have a trade combination here of selling 2 contracts of the SPY August 22 at 412, buying 1 put contract at 413, and buying another put contract at 408. Now, before you send this order, what you want to do is you want to go to Options Profit Calculator. So here we are at Options Profit Calculator. It's a 3-leg contract, so we select the 3 legs calculator. The ticker symbol is SPY, so you get the price, showing you the current price. And your first leg is to write a contract or to sell a put contract. So you select your option. We've talked about the expiration date being August 22. And when we look at the trade again, we're saying we're selling the 412. So the 412, we scroll up. There we go, the 412. We click on the bid and we change the number of contracts to 2. Then we want to buy the 413. So again, same expiration date, August 22. The 413, we click on the ask. And the last leg of the transaction, as we saw here, was to buy the 408. So we want to buy the 408. So we click on the buy for the 408, and then we run the magic. We click on calculate. Here it says the entry credit should be about $10. Our maximum risk is $290, and we could make as high as $110. The reality though, when we calculate, if we calculate the worst case scenario, if we're getting $10 on a $290 risk, that's a 3.44% return on investment. And if we annualize that for 365 days, prorated on 7 days, we could almost double our money if we get this kind of returns every 7 days. So what is the probability of profit, which is the critical bit, is 93.5%. So that tells us that this is a trade we can get into. So we come back to TradeStation, which is the platform we're using. They offer a very good demo platform, by the way. And we click send order, and then we send, and we can then go to our open positions to see. Now I've got a few other orders here. This is a test account, by the way, but I've got a few other orders here. So please ignore. I will just let you focus on the one we've put in. So we've got the SPY 22nd of August 2022, 1 put we bought at 408. We sold two puts at 412 and we bought a put at 413. So immediately you can begin to see the open profit and loss on the statement. We've got 0. So we'll come back later in the week and provide an update on the status and the profitability that has been achieved for this trade. If you look at other transactions, trade combinations, incidentally, they're all broken wing butterfly transactions. I'll just magnify this a bit. So this was a transaction that was entered last. We sold 20 units of the SPY put at price point 409, expiring on the 17th of August, and we bought 10 units of the 406, and we bought 10 units of the 410. So again, the ratio is we're selling 2 lots and buying 1 each of the puts. And if we do quick calculation here of the profitability that has been achieved on this trade, if I could just zoom in for everyone to see. So if we were to close this trade right now, we would have a profit of 1,060 minus 350 minus 620, which is a $90 profit on that transaction. But we're going to wait till the end of the transaction. But you see how easy, once you've got your risk well mitigated, how easy it is to begin to realize profit on your trade. So that's it. We will come back later in the week with an update on this trade that we've entered today for the broken wing butterfly strategy. As always, please don't take this as financial advice. Do your own research and make sure you have an understanding of the trade you're getting into, and be sure that you've covered your risk. If you like what you've seen, please hit the like button. If you've got questions, put them in the comment section below and we'll respond to as many of the questions. And we'll see you again soon. Take care.